Welcome to Dig Deep, the mining podcast. In this podcast, we go deep into mining news, hot topics, and live interviews with mining professionals and leading figures in the mining industry. Introducing your host, Rob Tyson, founder and director of Mining International and Mining International Executive, a leading global mining recruitment and headhunting agency.
Hi mining community, welcome back to another episode of the Dig Deep, the mining podcast. And today's guest is Richard Carleton, who's the CEO of Canadian Securities Exchange, who provide a modern and efficient alternative for companies looking to access the Canadian public capital markets. With qualifications in law and history, Richard and the CSE team have positioned the exchange to take a leading role in the provision of public capital to entrepreneur companies since 2014. And the CSE has set a series of records for new listings, capital raised by issuers and trading turnover. Richard's on the podcast to discuss his thoughts on the fluctuations in the commodities prices and why it's affecting our industry, geopolitical tensions, the progress being made towards addressing abusive short selling, carbon and DEI reporting requirements, and encouraging public pension plans to allocate more capital into Canadian small caps, and a lot more. I just want to give a shout out to our sponsors, Hawcroft, who are leaders in property risk management services in the mining industry since 1992. They offer insurance risk surveys, construction risk reviews, and asset criticality assessments, and more. Working across 600 sites globally, Hawcroft supports all areas of mining and mineral extraction. So if you're looking for any property and insurance risk management services, then please visit their website at www.hawcroft.com, and all the details are in the show notes. Richard, welcome to the podcast. How are you doing?
I'm doing well this morning, Rob. Thank you very kindly for having me.
No, and I appreciate your time out your busy day. So as these podcasts always start, I just wonder if you can just tell us a little bit about yourself, a little bit about your career, and then we can go into some of the questions around the Canadian Stock Exchange. So yeah, if you can just tell us a little bit about yourself and your background.
Well, I mean, I hate to turn this into a long history lesson, but I have been working in the Canadian public capital markets for close to 40 years now in one way, shape, or form. I like to say during the last century, I worked at Canada's incumbent exchange group, and then saw the light, and have been working with the Canadian Securities Exchange since 2005. And we've achieved a number of milestones in that period of time. We were at the forefront of multiple market trading in Canada, the introduction of, high frequency trading to large cap stocks, and number of changes that we have made to the capital formation process for early stage companies. And as you noted in your kind introduction, we've had tremendous success dating back more than 10 years now in competing effectively to list the lion's share of early stage companies coming into the Canadian public capital markets. And again, to segue into the topic for this morning's conversation, the mining industry is always an important sector for Canada's public markets. And we've done some tremendous work with the industry over the last 10, 15 years, but obviously over the last 5 years, as we went through the COVID pandemic and people began to think about shortening supply chains and reducing reliance on international supply chains. And of course, also now focus on critical minerals, battery metals, uranium to power next generation nuclear energy generation. So again, a really vital area for the Canadian Securities Exchange, and one that we expect will be extremely important in Canadian economic development, certainly over the next business cycle.
Yeah. I just wonder if you can give us an overview of the Canadian Securities Exchange, your function, and any statistics that you want to share with our audience.
Well, as I mentioned, I'm obviously the Chief Executive Officer of the organization, and in that I I am the church and state, I guess, of business development as well as regulation of the issuer companies that are on the exchange. We have roughly 750 to 800 issuer companies. The majority of those are early stage companies and in some cases pre-revenue in the life sciences, technology, mining. We developed an international reputation for working early with the legal cannabis industry in Canada, the United States, and overseas beginning in 2014. And again, we had some tremendous success in helping some of the largest companies in the world in those sectors get their initial public capital and enable them to grow. The landscape in Canada is quite crowded as it's extremely competitive. Not only do we have the TMX group, which of course provides the Venture Exchange and the Toronto Stock Exchange and the derivatives trading through the Montreal Exchange. We also have U.S. competitors in the form of NASDAQ Canada and Chicago Board Options Exchange Canada, which operate cash equities trading, and in the case of Cboe Canada listings franchise. We also have a number of ATSs, which are trading TSX, CBOE, and CSE listed companies competitively to our trading services. So it is a very, very competitive market for trading services as well as issuer services in Canada.
Yeah, and I suppose moving on to my next question, obviously, how do you see the fluctuations in obviously commodity prices across the board, whether it's copper, lithium, gold, any of the battery metals, impact funding for exploration and development companies?
Well, I think it's a very, very critical component of the folks drafting the business cases and tuning their pitch decks for investors to fund everything from the early stage exploration projects up to like full on go into production funding. And I think what's beginning to be well understood, certainly in Canada, is that in many cases, it's not so much about locating commercial deposits of the particular minerals that you're looking for. Because, we have that ability in Canada. We have a tremendous source of geological and mining engineering expertise, which of course is globally recognized, that can be deployed to identify whether we're talking the base metals, precious metals, uranium, and so on. We have all of those things in Canada. What we don't have, and this is where the investments are going to have to be very large and probably accompanied by significant support from local, provincial, and federal governments, is in the infrastructure required to move these, the ores to refining and smelting capability, as well as actually developing that refining and smelting capability so that Canada can become once more a significant and trusted provider of these materials to the global economy. If we look at the present state, it's abundantly clear that China's preeminent position in a lot of these materials that you talked about is a result not, of course, of those deposits being located in China. It's because they have the smelting and refining capabilities, as well as, for example, in the rare earth space, the technologies required to extract these minerals from the ores. And by controlling those processing capabilities in some materials up to something like 80% of the world's supply, they do have an untoward ability to impact the prices of the underlying commodities. So I'm not a tinfoil hat guy by any stretch of the imagination, but I don't think it's any accident that when a Canadian entrepreneur is looking to raise a couple of $2 billion to put a nickel operation into production and also pay for the construction and operation of a smelting and refining capability, that suddenly the world price for nickel crashes as that business case is being delivered. And I think it's fair to say we've seen that impact across the board. So it's my sense, and I think the sense of a lot of practitioners in the space, that in fact the world price is being manipulated. Might be an overly strong space, but the price is being moved to the detriment, frankly, of folks in the Western Hemisphere who are looking to build up those refining and smelting capabilities. So that's a real challenge for the industry, and people are talking about, can we think about somehow a guaranteed price where buyers will ignore, in effect, the spot price established, say, on the London Metals Exchange, and instead commit to long-term supply agreements at prices which are sufficient to support the investment both in the mine development and in the smelting and refining capability. So again, people are thinking about these issues, and there's I think a germ of some good ideas in there to help again support the local development of the necessary infrastructure to become, as I said, a responsible and reliable supplier of minerals to the global marketplace.
Yes, certainly. Are Canadian provincial and federal governments serious in their efforts to support the development of producing mines and related infrastructure like roads, rail, ports, refining, smelting capacity, etc.?
That is a great question, and one that every entrepreneur in the industry asks literally every day.
Yeah.
I think it's fair to say that the constitutionally in Canada, and of course, none of your listeners want to hear a conversation about Canadian constitutional law, but mining is a provincial responsibility. And
Yeah.
so it's really up to the provinces to provide the permitting, the rules, the regulations around exploration and mining development. Now, our previous federal government continually stuck their nose where, frankly, it was not legally permissible, but they did anyway, into significant projects using environmental impact and Indigenous relations as their excuse to get involved in the process. And I can assure you, it didn't speed it up any at all. In fact, it was a significant drag and another major risk introduced into the development of these projects. But I can say that over the last couple of years, the atmosphere has changed quite dramatically. A number of provinces have really gotten their act together, and I would say that Quebec and British Columbia are leading the way, and Ontario is soon to join the fray in terms of recognizing both that the permitting process needs to be sped up considerably from where it
Yeah.
is, that needless duplication of work needs to be eliminated, that the governments need to work on the same timeline as opposed to doing work sequentially. And again, I think they're all the while where there is a recognition that these projects have a tremendous opportunity to aid in Indigenous reconciliation. So there is a lot of wealth that can be generated for the local communities to provide the basics of healthcare, education, clean water, better housing, better employment opportunities. And that's there. And I think in many jurisdictions, there's a recognition that this is the case, and partnerships that are emerging with the Indigenous communities to, in fact, speed up the implementation of these mines in particular.
How are the geopolitical tensions affecting mining supply chains and resource nationalism, obviously namely in Canada?
Well, again, as you know, and many of your listeners know, we've been at the receiving end of several months of abuse from the President of the United States, suggesting that we're, an artificially created country, and that really the world would be a better place if we became the 51st state. I'm afraid he's ignoring the fact that the Canadian political center is about equivalent with that of California.
Yeah.
And that with the commensurate number of electoral college votes, a Republican would never get elected to the presidency again. So, so I think if he actually thinks that one through a little bit, we'll hear a different tune. But there's no doubt that again, first as a result of the challenges that the pandemic introduced into the supply chain, then a recognition that it may not be 2030 or 2035 or 2050, but the direction of the economy is electrification, and that will drive considerable additional demand for nickel, copper, cobalt, zinc, iron ore, phosphate. Again, the whole list, and the rare earths, of course. So that underlying thesis, I think, is driving a realization that we really do have to get serious about addressing the concerns of really the global community. And again, I don't think that the United States or the tariffs, for example, are going to impact certainly the supply of raw materials. It's more the finished steel or aluminum products that are currently on the radar screen for the Americans. But again, I think eventually, Mr. Trump is only going to be in office, I hope, for 3.5 years. And as we know, these projects take a considerable period of time, and there will be somebody else in the White House with presumably a different set of priorities and policies when it comes to global trade. And it just makes too much sense for Canada to develop these resources to become a more important part of the supply chain for Europe, for the continuing for the United States, certainly continuing for Japan, South Korea, and the South Asian economies as well. So,
Yeah. What progress has been made towards addressing abusive short selling in Canada's small cap market? And what role should regulators versus industry play in that enforcement?
yeah, that's a good move from, of course, the geopolitical situation right down into the weeds of market structure concerns. But again, if you were to ask, Rob, any entrepreneur with a junior mining company in Canada, and it doesn't matter which exchange they're listed on, they would tell you that they believe that the market has been skewed against them, and in particular that they've been subjected to significant short selling pressure, which they just can't figure out how it happens. Because again, I don't want to get into a detailed description of the details of micro market structure in Canada, but simply put, it's really hard to borrow the shares of a junior mining company, or any junior company for that matter, to make delivery to the buyer. They don't know that you're a short seller when in fact the transaction occurs on the exchange within the 2-day time, or actually the 1-day time period in North America now with the T+1 delivery. So it turns out that in fact there were loopholes in the system which permitted short sellers to postpone delivery for a considerable period of time. So that means they didn't have to find the stock. They could in fact, in theory, push the valuation of the company down over the course of close to 2 business weeks, basically, and then purchase the necessary shares in the open market to make delivery to the buyer, who in fact the transaction had taken place 2 to 3 weeks earlier. That's not right. That's not the situation that exists in the United States for short sales and most other organized economies in the world. So we've worked with the regulators and with the industry to implement changes to the rules and changes to the clearing and settlement system that essentially will force anybody making a short sale, of a junior company to have that stock lined up ahead of time. And the reality is there isn't a lot of stock available for borrow or otherwise in order to make good delivery on that short sale. So it will dramatically reduce the amount of short selling activity in the junior markets in Canada when it's been implemented. So we're close to the implementation timelines. The regulators are talking to the practitioners in the back office at this point about the changes that need to be made to their workflow in order to safely implement the changes to the rules. But again, there's considerable support, certainly complete support from the industry, from the exchanges, and from a number of other folks that will see this change implemented. And as I say, I think this will genuinely mark an improvement in the overall experience in the public markets for junior miners and junior companies in general.
Yeah, let's hope so. How do you interpret the deferral of mandatory carbon and DEI reporting requirements by Canadian securities regulators? And what does this signal about the current regulatory climate?
Yeah, this has been a matter of obviously debate in a lot of markets around the world. As we know, there's certainly a number of large and in many respects public institutions which have been asking their portfolio companies for increased disclosure on DEI and climate concerns, and also lobbying the regulators to implement some kind of mandatory reporting for both subject areas, and in particular carbon emissions reporting for public companies. We had a number of conversations with the regulators over the years. Our concern is really that, one, this adds a considerable cost to the operations of a junior capital company. I mean, if we think about most mining exploration companies, they may only have actually 2 or 3 employees.
Yeah.
Most of the work is actually done by contractors, whether it's the actual drilling, and of course the analysis of the core samples are done by the laboratories. So we're talking about, as I say, companies which really have very, very limited resources to take on additional regulatory responsibility, and let's not forget risk associated with these proposed reporting requirements. We also felt and reminded the regulators that this was yet another reason for companies to not go public, because if you could avoid the costs and regulatory risk associated with the mandatory reporting by remaining private, then you would. And of course, that's obviously a talking point for marketplaces around the world that, it's abundantly clear that more companies are electing to remain private for longer because of the costs and legal liabilities and risks associated with being a public company. So we don't need to add any more risks to companies in that regard. We were also concerned that again, the costs would be significant for implementing these things. We saw, virtually all of the big 4 accounting firms around the world have consultancies, and they've hired people and offering their services. But again, these are not large oil companies or giant producing miners like Barrick or BHP or Rio Tinto or whatever. Again, as I mentioned, these might be 3 people that are actual employees of the company, struggling to raise enough money to fund next season's drill program. And it's very, very challenging. And as I say, we were of the view that additional cost would really have had a devastating impact on the amount of exploration activity which would take place. So, and last but not least, of course, it was also abundantly clear that whether it was under the Biden administration and certainly under the Trump administration, that similar rules were never going to be implemented in the United States. That court challenges that were launched when the SEC proposed carbon emissions reporting full through to Scope 3, as well as, for example, NASDAQ's requirement to have DEI disclosure requirements for their issuers. They were immediately sued. And if it's one thing that is a certainty in life. It is that when it comes to a jurisdictional issue, the SEC is going to lose in court eventually if they are seen to be trying to expand their jurisdiction into an area that is probably better served by a different government department, like the Environmental Protection Agency, right?
Yeah.
We were looking at a situation where Canada would have had a series of complex and expensive requirements to report. The US wouldn't. And so, again, from a Canadian perspective, one of the concerns that we always have is that companies will decide to list in the United States instead of Canada, and this could possibly have accelerated that trend. So we're happy that the regulators have decided to postpone or defer work on the issue. And we think that that's ultimately a big win for the mining industry and the junior mining industry in particular.
Yeah. With the new federal government's commitment to reducing duplication in project reviews, how might this affect the timelines and investor confidence, obviously particularly in the resource-heavy sectors?
Well, our conversation, I almost wish we were having this tomorrow. Because the new federal cabinet is being sworn in today.
Yeah.
And that will start to give us some insight into how our new prime minister plans to address these issues. So, we're in a situation where Mr. Carney wrote a book, I want to say in about 2021, in which he appears to be a very committed environmental activist. And no friend of extractive industries, whether we're talking about oil and gas or mining. So that, there's that Mark Carney who's out there in the public consciousness. But during the campaign, he campaigned essentially, he borrowed the conservative economic campaign and talked about exactly what you asked, which was a commitment to support development of mining and oil and gas resources, the infrastructure that I talked about at the outset, and to work closely with the provinces and local governments to reduce the times required. Now, if with the cabinet appointments and some of the early statements, maybe he's serious about that. And to answer your question, finally, the answer is yes. That would be, I think, enormously supportive for asset valuations and for the companies looking to raise, whether it's they're going public capital or additional rounds to extend exploration on a particular project. And not last but not least, I mean, Rob, we haven't talked at all about the one area that has been very robust recently, which is the gold market. And we've seen a number of new gold exploration companies come to market, successfully raise capital to go public. But again, the valuations, if you compare them to the underlying commodity price, which is at near record levels, and I would suggest to you, and of course, I'm in no position to provide investment advice to anybody listening today or otherwise, but I would suggest that the geopolitical situation will continue to support a robust bullion price, and that should continue to support a robust market for companies in the exploration space. What we haven't seen yet is a return to some of the historic correlations between the valuations of the companies and the underlying commodity. So it kind of looks like the companies, and this is what the smart analysts tell me, both in the exploration and the production side in the precious metal space, are basically wildly undervalued compared to the historic model.
Yeah. Well, I hope Mr. Carney does keep to his more recent comments about obviously the mining and extractive industries. So we will have to wait and see.
Yes, we will.
There's a growing momentum behind encouraging public pension plans to allocate capital to Canadian small caps. What would it take to turn this into a meaningful policy shift? And why is it so important now?
Well, this really opens up a big issue. And that is, if we go back 30, 40 years, The mining space in Canada, the junior mining space in particular, was supported by the retail market. And most of the retail investment dollars that went into these companies were in discretionary accounts, high-touch accounts, whatever you want to call them, right? But there was an investment advisor who had the ability to consider early-stage company opportunities. And typically, Rob, I don't know if you have seen any of these in action, but company looking for money would get a private room in a steakhouse in Vancouver, Calgary, Toronto,
Yeah.
Montreal, and maybe New York and Denver.
Yeah.
You'd buy the advisors a steak and a nice glass of wine. The CEO would do the presentation, hand the deck out, and at the end of the meeting, the book would come out, and brokers would sign up for a certain amount of money and then allocate to particular clients after the fact. Now, as we know, as much fun as those days were from time to time, they're over.
Yeah.
And most of that money is now in self-directed accounts. They're in with discount brokers. In the U.S., the Robin Hoods, the Schwabs, the Fidelities. In Canada, we have similar, both independent brokers as well as the bank dealers with their discount brokerage operations. And the reality is, we haven't figured out how to get that money into, in effect, IPOs or secondary offerings directly from the companies. Right? We've tried some things, but ultimately, there's not a lot of money that's coming out of those accounts to support the going public transaction or the significant secondary market raises that these companies do. And so the thought is well, how do we do that? How do we get that money out? Or are there different ways? So one of the other things we know is that Canadian pension plans, which have grown to enormous size, I mean, they're world scale. They look like sovereign wealth funds.
Yeah.
And one of the biggest ones is simply for teachers in Ontario.
Yeah.
One of the better known funds in the world, like real thought leaders, very, very bright managers, and so on. But the reality is, they're at a scale now where they could have 10 junior companies absolutely hit the mother lode, find enormous deposits that are, commercially viable for years and years and years, generations, and it will not make a blip on their overall return profile.
Yeah.
Right? So they're just they just can't make enough money, with the risk associated with these, with the investment in this sector. And the other issue in Canada, of course, is that we eliminated about 25 years ago the Canadian content component for pension funds. So they don't have to keep any money at home if they don't want to. So they're investing, of course, in the Magnificent Seven and the large caps. They were very early and significant investors in public infrastructure projects. So, I think Ontario pension plans own airports in Australia and the Chilean water system and part of the British electricity distribution system. So the reality is that those dollars are also not available for investment in these companies. And so I think there are conversations going forward to really, as a matter of nation building, as much as anything, to have these funds basically put aside, what to them is a modest amount of money, but collectively might add up to 30 or 40 billion Canadian dollars, which, is a decent size nest egg, and devote percentage of that to sectors like mining exploration. And we'll say have one of the funds take responsibility for mining, somebody else say for AI, somebody else for life sciences, somebody else for software as a service companies. And that way we can have that seed capital, which will provide the lead orders that will help basically get these deals across the line and onto the exchanges. The other way, of course, is that, again, exploring ways to permit people to, in effect, market to the customers of the discount brokers and figure out, again, how we can engage those dollars in early stage investment. The Americans have tried some things with the Jobs Act, which was an Obama era innovation, Reg A and Reg A Plus, and the more aggressive limits around crowdfunding available in the U.S. are interesting, and there may be some opportunities to look at there. But as I say, for the time being, we'll continue to innovate with ways to get retail dollars in through changes to the Securities Act, and then again, potentially the pension funds can contribute what to them is a small amount, but in fact will be material additional funds available for the industry.
Yeah. And lastly, whether you're a junior miner or even a mid-tier mining company, why would you consider listing in the Canadian markets rather than the ASX or the LSE, AIM, Nasdaq, or even Frankfurt? What would you say as a closing statement why a company would consider listing in Canada?
Well, of course, we have a tremendous amount of expertise locally in Canada, whether it's the analysts available, the technical expertise. There are still significant number of brokers that do provide advisory services to the mining industry specifically. We have some of the biggest names in mining investment in the world who operate locally, and they are active investors in the early stage space. So folks like Pierre Lassonde and Eric Sprott and the Lundins and Robert Friedland and so on. And that's one of the beauties of the public market, is that a retail investor can basically see that the Lundin family has provided the lead order for a particular junior company. Those guys are smart, and they have a tremendously positive track record of investment in the space. You can join alongside them at an early stage and before the company has had the significant lift in valuations as a result of the results that they have generated. There's really only two markets in the world. It's Canada and Australia where that's the case. It's too expensive to list these companies in the United States. The retail participation rates and liquidity in the continent of Europe as well as the UK is not what it is in Canada in particular. So you have really the most liquid, the smartest, the industry leaders investing in early stage companies, the peer group available, and overall the local expertise required to provide the market services. So again, you always need to have some kind of liquidity availability if you're raising money in Germany or Switzerland or Australia or the UK or the United States or whatever. And we figured ways out to address those concerns for investors. There are tremendous trading links, international brokers, which link back to the Canadian Securities Exchange. We have all of the big world scale brokers, the Goldman Sachs, the Morgan Stanleys, the JP Morgan Chases, as well as the interactive brokers, and so on and so forth, are all connected to us. So again, you're able to market your company internationally to investors while operating in Canada, which in world terms is very low cost, respect for rule of law, all of the stuff that comes along with being in a G7 country, that, as I say, at a fraction of the cost of the alternatives.
Yeah. Richard, really appreciate your time. Thank you for sharing your story. Obviously updating us and telling us everything about the Canadian Securities Exchange, and obviously speaking about various topics around obviously fluctuations, commodity prices, geopolitical tensions, etc., short selling. Really appreciate your time coming on the podcast. If our audience wants to reach out to your team or want to follow the Canadian Securities Exchange and maybe even consider listing in Canada, how can they go about doing that, and what sort of social media platform channels do you advertise and market on?
Well, thank you for the opportunity. So our website is, of course, a treasure trove of information on all of those topics. And you can find us at thecse.com. So thecse.com. We're also extremely active on social media, although I will say our two favorite platforms are LinkedIn. So again, Canadian Securities Exchange, and we are posting new information daily on issuers and new opportunities and some of the outreach that we're doing. In fact, we have a couple of people on a mission to the Czech Republic and Hungary this week, and I will be in Australia next week.
Okay.
So again, we are definitely, we're wearing out the shoe leather.
Yeah.
We also have a very popular YouTube channel, CSE TV, in which we showcase issuers and other experts from the industry, various industries, with ideas on investing and trends and some of the things we talked about today. So again, we're there. We're on Facebook and X and a variety of other platforms as well. But our stats show that LinkedIn and CSE TV on YouTube are far and away the most important channels for us on social.
Yeah, great. We'll include those in the show notes, accompanies episodes for easy access, so our audience can reach out and obviously gain education and follow what the CSE are doing. So thank you again for your time. Hopefully you can come on the podcast again in the future when maybe the market may have in the mining industry may be a bit different than what it is now. It'd be good for you to come on the podcast in the future.
Well, thank you, Rob. I think it's going to be a very exciting few years for the industry and for the Canadian Securities Exchange. Thanks again.
Yeah, we hope so. Thank you for listening. Hope you enjoyed that episode. As always, appreciate your continued support. Please keep sharing these episodes far and wide. Obviously, this episode was focused on the Canadian Securities Exchange. However, companies that are outside of Canada do list on the Canadian stock exchanges. So please share this episode far and wide. There's a lot of obviously education that can be learned from listening to this episode. So thank you for listening. Please keep sharing these episodes far and wide all around the world. And until next time, happy mining.
Thank you for listening. Remember to reach out to Rob via the show notes and be sure to subscribe and leave a review. Until next time, happy mining, helping each other to improve the mining industry.